Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of EMAMI Limited, hosted by IIFL Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Panthaki from IIFL Capital Limited. Thank you, and over to you, sir.
Hi, good morning, everybody. Welcome to the EMAMI results call. After the pandemic, a lot of FMCG companies are reporting good numbers this quarter, and EMAMI is no exception. Certainly, the numbers this time have been quite robust. And to take you through what is happening in the business, we have with us Mr. Mohan Goenka, Director, and Mr. Rajesh Sharma, VP Finance. So without further ado, over to you, Mohanji.
Yeah. Thank you, Percy. Good morning, friends. I welcome you all to this conference call on EMAMI's result for the second quarter and first half year ended 30th September 2020. I hope all of you and your loved ones are safe and healthy. I am very happy to inform you that this quarter has been very positive and witnessed an all-round growth. EMAMI's performance has been very strong, resulting in double-digit volume-led revenue growth and improved margins in quarter 2 FY21. Notwithstanding the fact that our plants were not operational for over 20 days, disrupting the supply chain, EMAMI has registered strong growth, which the company expects to sustain in the coming quarters too. The quarter witnessed a revival of consumer sentiment, which is evident from the company's performance across brands. The domestic business grew strongly by 13%, with volume growth of 10% due to sustained momentum not only in the health and hygiene segment, but also due to robust performance in most of our other power brands. As a result, EMAMI posted a strong 28% growth in the domestic business in this quarter, excluding the winter portfolio. Offtakes of our winter portfolio were impacted due to the high base of 39% growth in quarter 2 FY20 due to the early pipeline filling last year. We do believe that Boro Plus is a phasing issue, and as the winter sets in, the brand is expected to do well in the current quarter. Despite the winter phasing and supply chain issues in quarter 2 impacting some primary numbers, EMAMI performed exceedingly well. With joining of our new sales head and healthcare division head earlier this year, we had a strong team in place to take the growth momentum forward. Chandu Healthcare range continued its growth momentum across products and grew by 53%. Pain management range grew by 31%. Kesh King grew by 45%, and Navratna grew by 14%. However, as I mentioned earlier, Boro Plus range declined by 25% and male grooming range declined by 24%. I must impress upon the performance of Kesh King, which stands out strongly. Kesh King has posted a robust performance during the quarter, registering its highest ever sales during a quarter since its acquisition by EMAMI in June 2015. We are happy that Kesh King has proved its mettle by its strong performance. We are also extremely optimistic about sustaining Kesh King's performance in the future as well, despite the muted consumer sentiments towards premium products in this environment. Further, the balms portfolio too registered an all-time high quarterly sales in quarter 2 FY21. Fair and Handsome, which declined during the quarter, has been making sequential recovery since August, The brand is being relaunched in the market in new packaging as Fair and Handsome Radiance Cream and Fair and Handsome Instant Radiance Face Wash. During the quarter, rural markets continue to perform better than the urban, aided by relatively lower impact of the pandemic. All the channels posted convincing growth, with e-commerce channel tripling its revenue during the quarter. Modern trade, which was impacted due to social distancing norms in the first quarter, has bounced back during the quarter, registering a growth of 9% in this quarter. While it took us, along with everyone, a while to adapt and adjust to the new normal and find a strategy to battle this pandemic, EMAMI launched 20 new products in the domestic market with more than 40 SKUs, including 8 new launches in Q2 FY21. The overall contribution to the domestic revenues during the quarter was 4%. For the international business too, we launched 13 new products in first half FY21. With a continued focus on the health and hygiene segment, the company continued to launch innovative products during the quarter. The company launched Jhandu Immu Jelly. The company also launched BoroPlus Antiseptic Plus Moisturizing Hand Wash and Jhandu Amla Aloe Vera and Karela Jamun Health Juices, among others. In this context, I must mention about our very own e-commerce portal jhanducare.com, which was launched during this quarter as a brand store for Jhandu healthcare products. The portal has been well accepted and caters to the e-com audience with existing as well as newly launched multiple e-com specific products. During the quarter, international business grew by 11%, led by Bangladesh and MENAP. I am pleased to inform you that 7 Oils in 1 has become the largest selling brand for us in the international business. We have launched 7 new variants of the brand in the past few quarters, and its popularity has increased significantly in Bangladesh since its ongoing media campaign with a local celebrity. We also introduced a hygiene range for international business as well, which is doing well. Our CSD business, however, declined marginally by 2% during the quarter. In this quarter, EMAMI increased its profit as well as margins. Gross margins at 70.3%, which are an all-time high, grew by 60 basis points. EBITDA at 257 crores grew by 33%, while EBITDA margins at 35% grew by 570 basis points. Cash profit at 233 crores increased by 31%, and cash profit margin at 31.7% increased by 480 basis points. This was possible due to stringent cost control measures and benign raw material prices, which helped improve the margins. I am also pleased to inform that the Board of Directors have declared an interim dividend of 400%, that is rupees 4 per share. EMAMI now has a war chest of growing products and a momentum of growth and recovery that was witnessed from May 2020 onwards has now culminated in posting very positive numbers by not one or two brands only, but almost all the brands put together. Fair and Handsome, which was degrowing, is also on sequential recovery mode. This is an extremely encouraging development for us at EMAMI, and we are confident of taking this momentum forward. As mentioned in my address during the last quarter about our proposed entry into the home and hygiene segment, we are now ready to roll out this range nationally in the phased manner post-Diwali. We are looking forward to the launch as the segment offers vast potential and has become rather exciting in the current scenario. With the restrictions of the lockdown easing, we continue to maintain a positive outlook for the coming quarters, provided the ongoing health crisis does not escalate further and economic activities revises steadily. Since the last week, winter has set in the northern and the eastern parts of India, and the demand for winter portfolio has already picked up. Given that the medium-term potential of the franchisee remains firmly intact, we believe the company is on track to deliver sustained profitable volume-led growth through focus on strengthening the franchise in the core categories and driving the new engines of growth towards gaining critical mass. With this brief, I now open the Q&A. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Mohanji, congrats for good performance. My first question is, after 2 years, you have seen very good growth come back. This quarter, we have seen companies like Nestle, Dabur, and even Britannia earlier quarter announce capacity expansion program. I understand for you it might be a bit early, but just to get a sense across your categories, what is the capacity utilization constraint building up, wherever it is building up in the next 2 years, if you could highlight?
So, Avnish, as of now, we have enough capacities, barring 1 or 2 brands, for which, of course, we are increasing our capacity. But at an overall level, our capacity utilization is about 70%. We still have at least 2 to 3 years left to fully utilize the capacities.
My second question is on e-commerce. So e-commerce normally is seen as own portal is normally seen as a loss-making business. In your case, currently short-term offer, there is no minimum size, free delivery, etc. So I want to understand, if it picks up a lot, how would you handle the losses? Is there any loss number you have put here? Or you think this may not have much footfalls, it's more for marketing, more for the brand details, etc. to the consumer? So could you discuss that?
So, Avnish, as we all know that the future lies in e-com, and everyone has to invest behind this new channel or this new distribution network. So we have also taken a plunge. We have built a very solid team behind this e-com, and in the last 40-45, we have seen a very big, sales coming in. Not very big in the sense, good amount of sales coming from the portal. So we have seen almost 10 lakh, visitors have visited this Jandu portal. So of course there is an investment budget. The losses are not very big. What we have anticipated, if the sales continue to rise, the margins are pretty high. Even the brands that we are selling through the portal. So I think going forward in the next 3 to 4 quarters, it should be profitable.
And 10 lakh, how many orders you got? How are you handling the delivery? Which third-party warehouse or delivery partner you have?
Yeah, so we have a third-party delivery system, and of course we are delivering it now for free because it's an initial disadvantage we are giving it to the customers. Let us see. I think we are quite bullish. As I said, we have an exclusive head for e-com for this portal. We have a big team. We have recruited very recently. And as I said, in the last 40-45 days, we have seen a big jump in this through this e-com. Jandu.
One last follow-up on e-com. Would there be any dissonance, pushback, because it's your own e-commerce? Would there be pushback from your Kirana guys or even other e-commerce company? Will you do pure e-commerce products, if any? What you already launched?
We are doing, exclusive products only for this portal, so which are not available in our general market.
You don't think any dissonance with Kirana will be there? Pushback?
No, I don't think so.
And last question, Kesh King range, any specific intervention you have done, any specific promotion, freebies, extra grammage free? What is driving this 45%? Because if 4 years nothing happened, as in not this kind of growth happened, obviously 45% India is not growing. No Indian FMCG is growing at 45%. If you could elaborate what you have done at the promotions level.
So not that we have increased exponential promotion in Kesh King. Over the last, again, 2 months, we have seen a sustained growth in Kesh King. And the feedback we have got from the market is that some of the local players and even some of the other large companies, so we have gained shares from them, I don't want to name the brands, but it is a mix of big companies and small companies. Both have got hit.
How much is non-hair oil in this growth? How much is non-hair oil?
Both have equal growth. Both the shampoo and the hair oil have equal growth.
And both shampoo will be now 10%? 10% of the portfolio?
Shampoo is about 20% of the portfolio.
Okay, Mohanji, that's all from me. Thanks a lot and all the best.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Mohanji and Rajesh, extremely pleasing to see the broad-based performance. Congratulations to you and team for that. That's the most important. I have a few questions actually. A couple of them was touched upon by Avnish, but just a little more detail. On Kesh King, some color on the segment growth. Were completely understood and logical that there's one large player and market share gains which is accruing currently. Probably that would have started a few quarters back itself from a trajectory point of view. But some color on adoption because you are one of those large players within that premium segment and with a job of developing that segment as well. So I'm just trying to see how sustainable it is into 2, 3, 4 years into the real medium term.
So Manoj, it would be difficult for me to really say, what is the kind of shift that has happened because as I said, the demand for Kesh King has come in the last 2 months. And it continues even in the month of October where we have seen an ever highest number for Kesh King. So as I said, the market has said that some of the local players have been badly hit, in this particular category. And also the likes of, Patanjali, what we have heard from the market, and even some bit of Indulekha. We have gained some shares from these 2 players. So, we would have to see that how long this momentum continues. As of now, there is a huge traction from the rural, huge traction from the rural markets, what we see. We haven't been subscribing to Nielsen data in this year, so we really don't know what is the shift in the market share. But at least what the number says, there should be a significant shift in the market share numbers.
Absolutely. All the best. Understood. Second, on the
continuously, day by day basis, we are seeing a good traction for the brand somehow.
Okay. Understood. And secondly, on the channels, the modern trade growth is very pleasing to see given the headwinds which you like any other player would have actually faced in the market. Some color on the modern trade growth. Is it more to do with the geographical mix, of your modern trade exposure? Is it addition of any new player? And that's one. Secondly, on the channel itself, I recall discussing it with you quite a few years back on, e-commerce and, maybe, you mentioning that some packaging innovations and a few structural changes. Some color on, what's happening in modern trade currently and beyond, recruiting a new e-commerce head, anything else, any new tie-ups, again, something to just look at the medium term on how the e-com trajectory for you should look like.
So Manoj, both for modern trade and e-com, we have launched a lot of new SKUs only focusing for these channels, In each of these brands, we have launched like a 600 ml lotion or a 500 ml 7 oil in one or even, 100 grams of face wash. So for very specific SKUs have been launched for both e-com and modern trade. Also, the new launches that we have done, has shown good traction in modern trade, particularly DMart is what we are seeing. Even big size of balms has done very well in DMart and some of the other formats, like 50 grams of Jandu balm. We have done exceedingly well in some of the modern trade formats. Some very specific promotions have been run for some of the channels, which has led to this growth. We still see a lot of headroom, particularly in e-com, because we are still at just 2.2% of our sales in e-com, whereas others are at 5 to 6%. So with the new team in place, with tie-ups with almost everyone in place, we think it can further go up to about 3% and then to 4%.
Understood. In fact, I would reckon the targets could be even higher, given that you are largely a personal care, and specialized food company actually. So, understood, sir. And a couple of bookkeeping questions, actually only one rather. I saw a line somewhere in the presentation, but still, anything to call out on primary versus secondary?
So, primary and secondaries are more or less the same in this quarter. But on an overall level, we have reduced our secondary sales have been higher in the first half.
So understood. So I mean, how do we look at that? Is it something which is a new equilibrium, or would you think you would be going back to the previous levels over the next year?
In the sense, sorry, Manoj?
For example, so your secondaries have grown faster, which means your channel inventory is lower today. So is this a new equilibrium the way you're seeing, for better, ROIs in the channel, or, is there an opportunity to, let's say, have more primaries in the next 6 months to 1 year?
So we would love to maintain this, hygiene at the distributor level. Currently, as of now, our distributors holding stock is about 15 days, which you remember had gone up to almost 20 or 30 days.
Yes.
So we would not want to fill up the channels, unnecessarily.
Understood, sir. And very last question, one comment which I heard from particularly unlisted companies in the sector was that, yes, new product launches are necessitated. I mean, it's a necessity at least in some segments currently, but many of them commented about the difficulty in actually placing the products, because the retailer is not really doing those offtakes. And second is, even from a consumer's browsing ability or willingness point of view, it's also constrained currently. What's been your experience actually on, the new products, the full throughput?
So, Manoj, I think we have good clout in kiranas and the chemist outlets. So we haven't found much difficulty in placing the new products, because all the new products are mostly brand extensions in BoroPlus, and BoroPlus has a fairly good equity, So we haven't found that challenge, to be very honest.
Understood, sir. Understood. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Arnav Mitra from Credit Suisse. Please go ahead.
Hi, Mohanji and Rajesh. Congratulations on very good performance. My first question was on the healthcare business. I mean, this includes the OTC as well as the balm. So you've seen the traction continuing very strongly in 2Q. Now, as the COVID fear kind of goes down, which we are seeing, are you seeing the traction kind of starting to ebb off, or are you seeing still very high demand for these products? And especially in the non-balm portfolio, if you could highlight some products which you think are very high potential, where you are seeing a scope of a permanent kind of a reset in the category sizes, including things like Chyawanprash, where you were a small player. So any kind of thoughts on this overall sustainability of the healthcare growth?
So as we speak, Arnav, we are still seeing a strong momentum, for the entire healthcare range, including the balms. Even the month of October and the first 5 days of November have gone up well for the entire healthcare range. So I really don't know if the momentum would, fall off once the pandemic is over, because balms or pancharist or any of these products have always been, in existence, and the need for these products would always rise. Consumers who are using these products, the amount of new consumers we have gained in the last 4 5 months, I don't see any reason why they should go back to, you know, their earlier medications. So this is one. Chyawanprash has been doing well in this healthcare range. Plus some of the new launches that we have done, whether it is in the juices or the Immu jelly, we would have to wait and watch, Arnav, how these perform, because these are absolutely new launches that we have done in the last 2 3 months. But as of now, retailers are very excited. Retailers are very excited to keep these products. We are also advertising some of the products. Hmm. Pancharist has also grown, almost 24% in this quarter. So overall, I think we are very confident that the healthcare, still has a lot of headroom to grow. Honestly, we should not feel complacent that we are going at 30-40%. This was long overdue, and I think still there is room to grow.
Right. And just one related question on Chyawanprash, given that it is a large category already within healthcare and it is also seeing a huge growth. So we know there's one large player. Do you see this as an opportunity to set yourself as a number two player in this category in the long term, or do you think because this already has a very large player, it's better for you to put your efforts in other new segments where possibly there is no strong player currently in the healthcare space? And anything specific you are doing to kind of capitalize on this opportunity that seems to be coming?
No, so definitely see, we will take all our efforts to, ensure that our Chyawanprash range grows. In this quarter, we have almost done more than 3 times, just in Chyawanprash. So let us see. Now the peak season has started. We have got an aggressive number for Chyawanprash, even for, the third quarter, which is the peak quarter. So definitely we would be a good challenger. We are spending a good amount of money to ensure that, it becomes a large brand for us. And because of the Jhandu's brand name, there is good traction in Jhandu Kesari Jeevan and, Jhandu Sugar Free Chyawanprash also.
My second question was on the Boro Plus, where you mentioned that, and I think HUL also mentioned in the call, the pipelining delay which has happened this time. So has the pipelining happened in October? What was you would have expected to happen in September, or it is going to happen almost along with the offtake, which possibly will now pick up due to the winter?
So this is very heartening, Arnav, that in the last 7 8 days we have seen a good amount of pipeline filling happening for the entire winter range. So we had expected this should happen post Diwali, but because the winter has set in very well in the entire northern and the eastern part of the country, so we are seeing a good, demand for all winter products. And this has happened in the last 7 8 days.
Okay. And my last question is on the margin. So you've seen this reduction in staff cost by about 100 basis point. Other expenses have gone down. So what part of this is something which you think can sustain, which has come out of your cost saving plan, and what part of this could be transient and as business kind of normalizes, costs will come back in that part of the equation?
So most of it is sustainable, because you remember we had done a project with ATK which is still ongoing on war on waste. So with that, whatever benefits we are getting would be sustained. The only thing what would increase is honestly the travel costs, because travel cost is still very, very minimal, which is not very large. So there should be some room of margin expansion,
Right, and you would expect
by and large,
of this,
because sales is also growing, and so staff cost also be, at least 100 basis points there should be reduction in the staff cost expenses, and even in the administrative cost, because of the cost reduction measures that have been taken, those are quite sustainable.
Okay. Thanks. That's it from my side. All the best.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good afternoon. I just had a couple of questions. One was, on the sales and distribution side. You mentioned in your remarks that you had a new sales head come in about 6-7 months back. Just wanted to know, any initiatives, efforts that you could call out, specifically on the sales and distribution part that you've done over the last few months, which are bearing fruit.
So Harit, because we are an ongoing concern, so we don't change too many things, but of course there is stability at the top, so which brings in a lot of confidence at the zonal manager and the area manager level. But what has happened is that because rural has always been a stronghold for EMAMI, and we also have a strong presence in the wholesale. So we did some bit of extra initiative both for rural and wholesale, which really gave us this growth. So we tweaked some of the incentives, particularly for these two channels.
Got it. And just follow up on that, what's your wholesale contribution as we speak? I know it has come down over the last 3 years, but what's your wholesale contribution now? And do you see that now being largely stable, that the channels are more or less stabilized now?
No, so we are still seeing growth coming in from the wholesale markets, and retail still declining. Even in this quarter, wholesale grew by 21%, whereas retail degrew by 14%. So the contribution from wholesale, which had come down to 38%, I think now has gone up to about 44-45%.
Got it. My second question was on the advertising spend part. You've done 20 new launches in the first half, 8 in the second half. I just wanted to know that the ad spend growth obviously this quarter is just about 3%. So is it a function of just having lower media rates but actually doing more volume spend, and also whether this should see a material acceleration going forward, given that you have this pipeline and you're kind of putting out new products?
So yeah, we have got some advantage of the media rates in the first half, which would continue also in the second half. But yes, we have taken an aggressive budgets for our new launches, particularly in the second half. So that should increase our advertising cost by about 200 basis points. In the
so 200 basis points for the second half for advertising.
Yeah. But despite of that, because of the other cost benefits, we still see, and benign raw material costs, we still see a margin expansion going forward.
Got it. Last question was on the
product mix, because it depends on the product mix. The high contribution or high margin brands, are have taken off very well, particularly the Kesh King range, the Balm range, even Boro Plus is the peak season. Navratna Fair and Handsome also has taken off in the last 2 months. So due to the product mix, the margins are not under pressure.
Very clear, sir. The last question was on the amortization part. So, what prompted the change in accounting, and do we expect this 90 odd crore a quarter number now to continue going forward? Is that the number we should take?
No, we have changed the life of the intangible assets from 10 years to 7 years this quarter, and going forward, roughly 55 odd crores should be the amortization every quarter. So this Kesh King would not now get completely amortized by June 22 against June 25, which was envisaged earlier.
So actually from next quarter it's 55 crores and goes up to June 22, correct?
June 22. And post that, we would be left with another intangible asset, CREM 21, which is a very small one. So that would continue for another 4 years.
Okay. And how much is the quantum of that? That will be very small, right?
Yeah, very small, around 15 crores per annum.
Got it. That's it from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi Mohanji, hi Rajeshji. Congrats on a good set of numbers. Mohanji, if we look at the current crisis, it is slightly, from a trade flow channel mix perspective, it is opposite to demon, where GT is gaining market share versus modern trade. And we have been historically underrepresented in modern trade versus GT. So do you believe that we are beneficiary of this tailwind, and once modern trade bounces back, perhaps we'll lose some of this momentum?
No, Tejas, I don't feel so, because now our modern trade contribution is also about 8-9%, and we have very specific SKUs now launched, for modern trade. So where we are seeing very good traction for most of our new launched SKUs, and even the home hygiene range, or even the new Boro Plus, hygiene range that we have launched in modern trade, is seeing good traction. So I don't see, once everything becomes normal, that we would see any difficulty coming in from modern trade.
Great. Second, Mohanji, you spoke about war on waste and gross margin benefit also continuing with us for some time. So what is the new margin band will like to operate with, and what will be the reinvestment which you will like to put in the brands coming out of this savings?
So what the margin looks like, Tejas, is I think EBITDA margin should be in the range of 30% or so. That's what it looks like for now. And we are aggressive, as I said, on the new launches and also investment on the new launches. We are increasing our expenditures. So we would have to wait and watch, how the new products fare. But yeah, of course, we are committed to invest behind new launches.
Sure. Last question on digital marketing strategy, and it is partly a feedback also. So many food bloggers have hailed Zandu honey as the most authentic honey, and then they put certificate of NMR, C3, C4 test versus other brands. But somehow in our communication, we aren't as aggressive in capitalizing the same. So any reason there?
No, we have tried it in the past. Now we are taking honey and Chyawanprash, both the portfolios, aggressively. The season for honey has also now started, and we have taken aggressive budgets for in this quarter for honey. Let us see how it does.
Okay, that's all from my side. All the best.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Managers Private Limited. Please go ahead.
Yeah, most of my questions have been answered. I had just one question. How is the growth in the healthcare, specifically in Vigorex and Nithyam? And historically we've seen Pancharish, Vigorex and Nithyam being large part of our sales. So is the market expanding in terms of some of the new consumers buying these products, or is it repeat sales? And what's the sustainability of this? As somebody was asking post the pandemic settling, how are things happening on that front?
Mm-hmm. So Nithyam and Vigorex have not done so well in this quarter as compared to some of the other healthcare range. Nithyam, we see a bounce back coming in, but Vigorex, yes, we aren't putting much effort on Vigorex now. But what is heartening to note is the bounce back of Pancharish. I mentioned we have grown at 25%, and this growth momentum continues in the month of October also. So,
And these are more of newer consumers, or is it repeat purchases given suggestion and the new campaign? Or
no, this growth came in after the new Amitabh campaign that we launched for Pancharish, and so definitely we are seeing a new set of consumers coming in. We also changed from glass bottle to PET bottle, which led to some distribution expansion in this category.
And on Navratna, I think we had done some test marketing on, the winter version for warm. So what's the plan? Is there a focus to launch it selectively in, some states for the upcoming winter? Are we, planning awareness about that product? What's the status on that?
That is still on the test market stage. So we would be only doing it in one area to see how is the response. Then only we will take it nationally.
That's it from my side. Thank you. All the best.
Thank you. The next question is from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, hi Mohanji and Rajesh. Congrats on good set of numbers. So I have a few questions. My first question is on the healthcare range where we have grown very well during the quarter. Now, incrementally, if you look 4% of the top line from the new launches, most of them are in the healthcare, you can say, range. So out of this 30 crores of incremental sales, which are the major ones which who have contributed to this incremental sales?
So actually, most of it is not from the healthcare. Most of it has come from the hygiene range, which is the Boro Plus hygiene range. So almost out of the 4%, roughly about 2.6% has come from the Boro Plus hygiene range.
Okay. And which one of these in particular do you see is having, for example, sanitizers and all? For example, some of the other players, they have already started witnessing the plateauing of sales. So which one of these new launches do you think hold really long-term potential?
So you are right. Sanitizer sales have fallen dramatically over the last few months. But Boro Plus soap, hand wash, aloe vera gel, and all the other brands, they are still showing some, momentum. So we will have to wait and see, This is very new launches we have just done in the last 3-4 months.
Okay.
Yeah.
So my second,
continue.
Yeah. So my second question is on the rural-urban breakup because EMAMI traditionally has been a company where the saliency of rural sales has been higher than most of its peers. So what is the current, you can say, contribution of rural sales to the total? And how has EMAMI grown in rural versus urban in the year just from previous quarter?
Yeah. So this quarter, our urban sales grew by almost 8%, whereas rural grew by 20%. And contribution from rural has always been higher. Traditionally, our contribution from rural has been about 55%, So we still have to check the data, but our estimate shows that it should have gone up by at least 1% or 2%.
Okay. And so my final question is on the dividend payout. Earlier, EMAMI used to pay around 30% dividend payout. Now you have already declared 4 rupees as dividend. Now, are we looking at a situation where the payout structurally goes up to in the range of, say, 40 to 50%?
So it should be, because the company is doing well and the profitability is increasing. We have some war chest. So most likely the dividend should be in the range of about 40 to 50%.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Shirish Pardesi from Centrum Broking. Please go ahead.
Hi, Mohanji and Rajeshji. Good afternoon. Thank you for the opportunity and really heartening performance seeing after a long time. So I'm sure the catch-up has happened very quickly and looking at the favorable season, which is panning well. So I have few questions. The first question, which is most important to me, can you throw some color on our pledge shares? And you had guided that by March we will try and reduce as much. So is there any further development which has happened and any further scope can happen by December, or you can prepone your zero pledge by December?
So, Shirish, presently our pledge is about 40% or so. So, as we have maintained that our endeavor is to bring it down to zero levels. I don't see that happening by December, but we are on it, and once we get rid of some of our other assets, it would all go in reducing our pledge. So we are absolutely committed towards that, but I don't see that happening by December.
Okay, thank you. My next question is on the gross margin, and you said that this is the first time we have crossed 70% mark. So if I observe, there is a lot of tailwind from the input material. So is there any chance, as you have mentioned, that we have a high contribution with high margin business like Cash King and BoroPlus, which is going to come up? So is it fair to say that you're saying 30% range, that band, but I directionally see that second half has always been a better for you. So is it that something you have been super conservative, or you can say that there is still further scope for having a gross margin inching up to maybe 200-300 basis point to 72 or 73%?
So, Suresh, we would have to see, because quarter 4 normally it is about 67%, and with the new disinfectant range or the new range that we are launching, there the margins are slightly lower. So it would depend on the product mix, but we are very confident of at least 70% coming in the gross margins for the year. Yeah.
Okay. Just one quick question on the new launches. You had guided that we are getting into floor cleaning, a completely new category.
Yeah.
Is there any thought it will come up, and any update on Fair and Handsome relaunch?
Yeah, so the hygiene range we have already started launching in some of the markets. The brand is EMASol, and we would ramp it up post Diwali, because this time is a slightly dull period before Diwali. So, and as far as Fair and Handsome is concerned, as I said, product has bounced back post August. We are seeing growth coming in the last 2-3 months. We are relaunching with the new packaging both in face wash and in cream. So, I'm sure that if this momentum continues, the brand will see a growth.
Okay, just last question from my side. You mentioned that last quarter you have hired a head of business for healthcare range. And I think right now we see that the season and the opportunity thrown by corona pandemic is also very large. Do you think that this doubling of sales can happen in second half? Because by now your head of business would have settled, you would have found out the opportunity, and there is a slew of product which you are planning. You're also banking on much more higher sales from Chyawanprash range. So tell me something about what are the things which has changed in last 4-5 months when you have got a new business head?
So what has happened, Shirish, is as I said, our focus has been increasingly on the portal, which we have launched very successfully. That is one thing. Secondly, we have launched a lot of products under the healthcare range in the last 3-4 months, which was long due, which is also a very healthy sign. I'm not too sure of doubling the numbers, because Chyawanprash has a base now, in the third quarter. So to double the numbers would be slightly challenging. Also, Pancharist has also in the base, but as we have seen almost a 53% growth coming in the healthcare, we see that momentum also in the month of October. So we will have to wait and watch, whether it would be 30%, 40% or 50%. But yes, as I said, there is still a lot of headroom left for healthcare to grow. And we are very committed to invest behind this range or behind Jandu. Kya growth aayega, that we would have to wait and see.
Okay, sir. Thank you and all the best.
Thank you, Suresh.
Thank you. The next question is from the line of Percy Panthaki from IIFL Capital Limited. Please go ahead.
Hi, good morning, Mohanji, Rajeshji. Just a question. You remarked that the wholesale business has grown and the retail business has actually declined. So just wondering, what is the reason that retailers would want to purchase our products from wholesale instead of purchasing it directly?
No, what has happened, Percy, is that because we have a strong rural this thing, so particularly the rural is covered by the wholesale.
Understood. So in urban, would wholesale and retail be growing at roughly the same rate?
Yeah, because urban, as I said, we have still grown at 8%, but rural has grown by 20%.
Right.
So because of this pandemic, people are unable to cover the retail channels very effectively, all the channels. So whoever are buying, mostly buying from the wholesale. But this growth has come because of the demand coming in from the rural areas.
Right, sir. Right. Got you. That's all from me. Thanks.
Yeah. Thank you.
Thank you. The next question is from the line of Amit Sachdeva from HSBC. Please go ahead.
Hi. Thank you so much for taking my question, and congratulations, Mohanji, for a very good set of numbers. So my questions have been answered, but just if I may sort of go a little bit deeper into Fair and Handsome and more so male grooming category at large. Obviously, this period has been of disruption, and male grooming, especially category, has been impacted, but it also gives us time to perhaps rethink positioning of what the future could look like for that category and what brands you want to operate in. He has not done well in the past, and Fair and Handsome has its own sort of challenges. Has some and as the new strategy was being written for that brand for relaunch, is this only the relaunch of the existing products, or has some rethinking has been done on brand architecture? What other categories, male grooming, you will be entering, and which brand would be the mainstay? Would be deprioritized, or how the male grooming as a category looks like, not just for next quarter, probably next 2 years from you, how we should think about the structural growth part of it and your play in that area?
So, Amit, male grooming has been an important part of EMAMI, and but as you know, Fair and Handsome itself was struggling for quite some time in the last 4, 5, 6 quarters. So our first priority is to ensure that Fair and Handsome bounces back. You would also appreciate post-pandemic, even pre-pandemic, there was lesser demand because of discretionary spends coming down. Okay.
Sure.
So this category was always, under threat. But as I said, over last 3 months, 2 months now, sequentially, the brand has come back to the growth. People are stepping out of their houses. So people have started buying it. So our first priority is absolutely to ensure that Fair and Handsome goes back to the, what we used to do about 6, 7 quarters back. Okay, that is our first target. We are not thinking of any too many launches under the male grooming as of now. Okay. So two areas where we'll be focusing is on the cream and on the face wash.
Sure.
Yeah. We have relaunched the product last month. So let us wait and see how this turns out to be.
Sure. No, that's very helpful, Mohanji. But what about he? Any changes, any plans?
He का तो अभी season नहीं है, Amit. There's no season for now. But yes, we aren't spending too much money behind he as of now.
Okay, great. Understood, Mohanji. Completely understood. And Mohanji, in Kesh King, if I may ask, what SKUs are selling the maximum, and any particular SKU or size-wise color which is giving you a little bit of more nuanced traction in the category? Is there something that we should read into this as well? Like sizes by SKU?
The highest selling SKU is, of course, the 100 ml.
Okay.
But as I said, we also launched a 600 ml for the e-com and modern trade, which is also doing exceedingly well in these two channels.
Okay. And LUP, there is no LUP-wise traction there, or how the LUP space?
No, we have just launched the LUP in shampoo. That is about 2 months back. We are yet to see the demand pickup coming in from that SKU.
Okay, understood. Understood, Mohanji. Thank you so much, Mohanji, and all the best.
Thank you, Amit.
The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yes, sir. Just two follow-ups. In Chyawanprash and maybe even honey, you are the challenger brand. You have done really well in Chyawanprash, 3x sales. So my question is, now this hair oil, edible oil brand has come into both these segments. So would you be worried, because normally when a new entrant comes, and which is also a strong brand, Saffola is a strong brand, and obviously they'll spend also. Normally in such instance, the market leader is not impacted, the challenger brand gets impacted. So what would be your quick thoughts whether edible oil can be taken to Chyawanprash? And second, what would you do to avoid any loss of market share, which anyway is small? You have been trying a lot, but it's a small market share. You have grown 3x, but it's a small market share.
So, Abneesh, I won't be able to comment on how Saffola would do in Chyawanprash. Okay. But as I said, we also have an aggressive plan, and Jhandu is fairly well known in this Chyawanprash segment. Jhandu Keshri Jeevan has always been a good brand. But as you rightly said, our contribution from Chyawanprash is not even 1.5% of our total sales. So, whether it goes up to 2 or it stays at 1.5, it really doesn't move the needle so much. But, we are established player. I don't see any threat coming in from Marico as of now, at least to us.
And 7 Oils, the growth rate has come off a bit. In fact, it's lower than obviously Kesh King and even the cooling hair oil. So anything worrying there, or it's just a case it is not a peak season?
No, there's nothing to worry. October month we have seen a bounce back in 7 Oil in one also.
Okay.
And internationally, I had said it has already crossed 100 crore mark in international. A run rate, yeah.
Right. Okay, Mohanji, that's all from me. Thank you.
Thank you. The next question is from the line of Neeta Sachdev from UBI. Please go ahead.
Yeah, hi Mohanji, Sunita here. Congratulations on a good set of numbers.
Sunita, आपका नाम नीता बोला नीता.
That's the reason I said I'm Sunita.
Okay.
Anyway,
Yeah.
just wanted to understand what is the state of the rural markets, because you said you've obviously grown at 20%, which is an excellent number. Is there any low base on that growth specifically for rural? And just continuing on that, where is this growth specifically coming from? Any particular geography? And any changes in the brand mix for rural that do well with the wholesalers, except your traditional brands?
So, Sunita, fortunately, because of reverse migration, and Emami had always had a strong foothold in rural through the wholesale. So most of our brands, particularly the pain balm portfolio, has done fairly well in the rural markets this time. Also, we are seeing a good amount of traction coming in the Boro Plus over the last 2 months, coming in from the rural areas. So these are, of course, the traditional products only. But across the board, particularly the markets of UP, MP, the Hindi belt, we have seen good amount of traction coming in the rural markets. South also for us has done exceedingly well for rural, particularly in the pain balm, where our penetration levels have really increased, in Maharashtra and in South. So it has been an all-round performance.
Anything from the new launches or new extensions that you would like to call out that are doing well in rural?
New to abhi tak, Sunita, we haven't reached out to the rural areas as far as the new launches are concerned. We are still focusing quite on the urban markets.
Okay.
Yeah.
And is there any downgrade visible in either of your pack sizes, or vice versa? Isn't any upgrades visible in rural?
No, not really. Kesh King has done very well in rural markets, particularly in the north. Yeah. and which is honestly surprising even for us. That suddenly how come this demand of Kesh King? Huh? So, and as I said, some new SKUs have been launched in modern trade. Big size SKUs have been launched in e-com and modern trade. So, which have also contributed to the growth of all of these brands.
So you're pretty confident about the rural growth sustaining at these higher levels?
As of now, it looks like, Sunita, that for us, because month of October and even now, the winter has set in very well. We are seeing a very good demand coming in, to be very honest.
Great. Very good to hear that, sir. And on the other side, very good to see your new launches under Zandu. This is something that you always wanted to do.
True,
so all the best for that venture and all the
Thank
best
you.
for winter also, sir.
Thank you, Sunita. Thank you.
Thank you. As this was the last question for today, I would now like to hand the conference over to the management for closing comments.
Thank you, Percy. Thank you all the participants, and thank you IFL for arranging the call for us. Thank you. Have a good day and stay healthy.
Thank you.
Thank you.
On behalf of IFL Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.